Good morning, and welcome to Investment Talk TV, brought to you by the award-winning advisors at Legacy Wealth Management. And now, with the latest information on the stock market, your investments, and retirement opportunities, here are Legacy Financial Advisors Paul Myers and Brady Brunsvold.
Well, a big welcome to you wherever you may be this morning. Look, we have some special guests with us today. Besides Brady, good morning to you, Brady.
Hey, good morning. Happy to be here. Happy Easter.
Oh, yeah.
By the way.
Oh, yeah. And we've got Brian Bruce. Good morning to you.
Hey, good morning. Good morning, gentlemen.
And besides these two fellas, we're going to have a special guest in a minute or two. But look at who we have here in front of us today. We have Lucy, the Legacy Wealth Management mascot puppy. She's here on high alert. As you can tell, she's dressed up a little bit. Myra has her in her Easter neckerchief there, and Lucy is kind of resting, I guess, right now after a full day of watching the activity. And what a week it's been, guys.
Yeah.
Volatility, which is another way of saying the market's gone down a number of times.
Couple of up days, too.
Yeah. Do you think as we head towards the future that things are going to settle down a little bit?
Well, I think we'll see continued volatility, if you want my honest opinion. I think it'll be up and down quite a bit. We're into earnings season, and that always hinges on what we see per day, because sometimes there's 100-plus companies reporting every day, and that can certainly sway things. So,
and Brian, you've got a lot of companies I know that you're watching too, and volatility is the key word.
Lots of companies I'm watching, particularly financials industries, the first companies to report earnings, and lots of volatility to follow with that. So.
Well, I was going to ask Lucy if she'd be willing to cover the agenda, but she seems to be at ease right now. Yeah, there she is, looking good. Brian, let's start with the agenda. What have we got?
I'll go ahead. I'll go ahead and pinch hit for Lucy here and substitute. So we've got our viewer mailbag and some great questions at that. And as always, we have our favorite 5 points in 5 minutes, and then we'll wrap it up with a stock market week in review and what's been happening at Wall Street.
All right. And what are we going to go to after that?
Well, lots of stuff. We have, I did want to mention, Paul, we did have a seminar here this past Tuesday that was scheduled for Bismarck. And, of course, the weather did not want to cooperate. So we have postponed that. We're going to try and get back into it as soon as Mother Nature allows. But if you are registered or you want to register, just let us know, and we'll make sure you get on the list for the next time we do that, which hopefully will be in the next couple of weeks here as soon as the weather clears up a little bit.
And we'll make you a deal. We're going to talk more about those seminars as we get later on in the show. But as far as our agenda goes, we're pretty excited to have Sarah Heinrich on board with us today to talk about the situation in the farm and ranch areas, what's going on in agriculture and things like that. So before we go any further, let's turn the tables a little bit and bring somebody else in as our guest today on Legacy Wealth Management's Investment Talk TV. There she is. Hi, Sarah. Good morning, and welcome to Investment Talk TV.
Thanks for having me. It's great to be here.
Yeah. And you know what? We've lined up a whole battery of questions here. And once again, Lucy can't wait to hear some of your answers because she's pretty interested in. Oh, there she is. She rolled over a little bit. How nice, Lucy. Anyway, guys, go ahead and lead off. Brady, Brian, what have you got there to talk about today?
Well, I'll start. I guess my main focus is, of course, around the weather that we've seen here recently, and lots of stuff going on in the egg world. One of the main things that we've been talking about for a year or so is the drought we've seen across the state. And it's nice to see a big chunk of moisture. I know there are some places that got 30 inches of snow. So it's kind of interesting to see that and how it might play in. But my first question, I guess, would be kind of around that. And how does that affect spring planting? I know it's a little bit too soon to be planting anything yet, but do you see that having any adverse effects or maybe some good effects out there for, the next month or so?
Spring planting will definitely be delayed. There is no doubt about that. We're definitely going to be looking at some delayed planting dates. I know producers were getting pretty itchy, pretty excited to get into the field. Now, when we're talking about this substantial of moisture, I would be very surprised if wheels were turning before the 1st of May, probably. And that's really going to depend upon where you're at in the area. They're also predicting a colder weather pattern for us. And so that's really going to play in as well. If we've got a lot of snow on the ground, we have cooler temperatures, we're not going to be melting that off quite as fast. So I think that everyone was pretty excited for spring planting because we were so brown and we were so dry. Now I think the tables have turned.
Yeah, that's really good. And, along with that, I think I was reading that there's still kind of an anticipated drought, even with this giant chunk of snowfall that we've seen. Is it better now at least? Or, obviously we don't know what the rain is going to be coming for the next, 2, 3, 4 months. but I would think this would help a little bit as far as combating some of that drought that we've seen.
I'm really excited to look at the next U.S. Drought Monitor map that's going to be released next Thursday. What came out this week, we didn't get to see any of those impacts yet from the snow. So it's going to be exciting to see what's going to be coming out on Thursday to see what kind of relief this snow provided. It was a really wet, heavy, it was a packy snow, tough to move. And if you took a line and you basically ran it up kind of almost to the, that Bismarck, Minot line, and you went west, almost every single county was experiencing some form of drought. So I'm assuming and I'm hopeful that this snowfall will at least alleviate some of those drought conditions, get those pastures started, and allow those producers to at least plant into a wet seed bed so those seeds can get germinated and at least get a good start.
Hey, Sarah, this is Brian Bruce speaking with you now. Well, first of all, I want to thank you for coming on the program this morning. That was very generous of you. I have a quick question about calving season. We have a lot of clients who are farmers and ranchers and have calving season right now. And with this much snow going on in the last few days and limited shelter space, what have you been hearing around some of the concerns of calving season? Is that something that you can share with our viewers and shed some light on?
Absolutely. It's extremely challenging. We're in the heart of calving season as well. And so right now when we've got, a foot of snow, I would guess roughly on the ground, it's really, really tough going. We have limited shelter space. You're trying to get as many cows into the barn as possible. And, we can go through like some 24-hour events, but when we're talking about 3-day extended periods, it's really hard to be able to keep up with that, to find enough barn space. I know we cleaned out a cold storage shed that we used to park machinery in, pulled all the machinery out, and then we started setting pens up in straw so that we had more space to keep these newborn calves. And so it's been very challenging. It's been very hard. And a lot of producers have moved back their calving because they would rather calve in April and May when things are a little bit warmer versus in a January, February timeframe. And unfortunately, when these late events hit, it's really, really hard when it happens right during the middle of your calving season. It makes things extremely challenging. Those older calves are actually a little better off that were born in January and February, just because they've got that strength, they've got that age on them, and they seem to weather the storm a little bit better.
Well, very good. All this talk about calving and beef, Brady, I know you've been talking about maybe loading up on some steaks, but what, do you have to go to the bank to get a loan for that?
Yeah, I'm currently submitting my financial statements to the bank so I can get a couple steaks for this weekend here. What do you see? Of course, that's a joke. What do you see here as far as beef prices? I know maybe not directly related to the calving season here and the struggles that we're seeing. But how about, beef prices in general still elevated? How do you see that shaping up for the rest of the spring and summer and even into later parts of this year and beyond?
We're going into grilling season, and so that's really when things get busy at the meat counter. So it's going to be interesting to see how it plays out. In the past year, since February 2021, we've seen that food price index increase 8%, which is pretty substantial when you talk about the inflation. I was looking at a list of different products that are expected to go up even higher in price. Some poultry and eggs made that list. The beef did not make that list. That's not to say that it's going to be secluded from the inflation and that we won't see higher prices yet at the market. We certainly could. It'll be interesting to see how that plays out. But yes, across the board, I think we're all leaving the grocery store with a bigger bill and probably fewer items in our cart.
Yeah.
It's interesting when you mentioned the grilling season. Last 4th of July, we did a special Investment Talk TV show where we did some grilling out on the grill, and we made some steaks, and Brian was there. And guys, we're going to have to do that again this year. Maybe we can invite Sarah to come along and help us. Are you a pretty good grill master, Sarah?
I don't do too bad. I will not pass up a good steak, though.
Okay.
That is my favorite by far.
Well, we do some pretty good steaks there. Brian and Brady, I know we've got some other things to talk about with Sarah while we've got her.
Well, one of my other questions, speaking of high prices, this whole Russia-Ukraine conflict not only is increasing some of the prices of commodities, but I know some of the inputs, nitrogen and things like that come from Russia have certainly come up. Are you seeing that to be a real struggle as far as inputs and pricing on fertilizer and things of that nature out there?
We were already facing challenges with fertilizer prices. We've seen fertilizer prices more than double within a year. Farmers, it is expected, will spend more to plant this 2022 crop than they have spent to plant any crop in history. Input prices are up. We have a shipping crisis currently going on. We have the war with Russia and Ukraine going on. There is just a real number of different factors. Our supply chain is really still trying to, I guess you could say, heal its wounds and come back from that. And so when we talk about what it's costing to put a crop in the ground, we knew it was going to be expensive in the fall, and it only continued to rise in price as far as what we're looking at going into winter, and then it even rose further into spring when we saw the war escalate. And I think that's really changed some producers' planting plans. According to the latest March 31st prospective planting report that USDA released, corn acres are expected to be down. Soybean acres could reach a record high at 91 million acres. And so I don't think that that's a big surprise for anybody. They're more of a nitrogen fixer. South Dakota's in that. They're expected to plant more soybean acres. North Dakota and Minnesota fall into the categories of expecting to plant fewer corn acres. And so I don't think that that took anybody by huge surprise. And right now, when you look at the board, commodity prices are good on nearly every single commodity out there. Almost every single commodity is going to be a moneymaker right now. And so it's not that that price is necessarily driving what you're going to plant. I think input costs are really driving right now what you're going to be planting.
Yeah, and I was going to ask that because, of course, corn and beans are still way up there from what we've seen. But I would think there's some sort of sweet spot. Maybe it's soybeans, like you said, for the least amount of inputs needed or cost and the best possible price. So you're going to see a big boost in that people planting more soybeans this year. So that makes a lot of sense.
Right. Whatever you look at on the board, whether you want to look at the wheat, you want to look at corn, you want to look at soybeans, you're going to make money no matter which commodity you're planting right now. So I think producers are really keeping a mindful eye as far as what those input costs are going to be, whether it comes to seed, chemical, fertilizer to get that crop to harvest versus which commodity is going to go in the ground based on price on the board.
Yeah, that makes a lot of sense. I guess my last question would be, specific to North Dakota. What do you see? Of course, we don't know what Mother Nature has in plan for us, but how is it looking to shape up for this year as far as pricing and profitability for our North Dakota farmers?
Commodity prices are good and commodity prices are strong. This recent round of moisture, the moisture that we had in the fall, I think that will hopefully be better off than what we saw in 2021 just due to the historic drought. Even though we had good commodity prices at that moment in time, we just weren't taking enough bushels into town to actually reap the benefits from it. So I think overall, statewide, I think we're in a better position than where we were in the spring of 2021 going into it. At this moment last year, we were in the field, we were planting. It was, extremely dry. Or if you weren't planting, you were doing field work or spreading fertilizer. And so we're in a different situation now. We're in a wetter situation now. And so I'm hopeful that that is going to mean more bushels come this fall and come harvest time.
Well, that sounds great. Brian, I know you've got some more information to cover, and Lucy and we're pretty attentive. We're ready.
Yeah, we're just getting down to wrapping up the interview. But I thought of one really important question to ask you, and I think our audience members are interested in getting some of your input on this. So the White House just a few days ago announced the summer gasoline blend allows for the sale of E15, that's 15% ethanol, from June 1st to September 15th. And that's estimated to save consumers on average 5 to 10 cents per gallon. What can you share with our viewers, what you know about that and really the inputs in terms of the refineries and the available ethanol? Are we going to be able to meet that standard?
So that's coming through an emergency waiver. I know that there's a lot of hope within the corn industry that this is going to become permanent, that we're going to permanently be able to see E15 sales through the summertime. A lot of myths have come out about ethanol being harmful to engines. Those are finally being destroyed. Finally, consumers are realizing at the pump that it's a good choice. You can put this in your vehicle. It's safe to be using. And it's really exciting for the corn industry right now to be seeing this kind of movement and to be pushing these type of gallons and bushels into the automotive sector. I know this has been a big push for a long time. And if you talk to anybody in the corn industry, they say this really fits that clean fuels need and that clean fuels want. And so, I definitely think that the ethanol industry will be able to meet that demand. I know there's a lot of excitement rallied behind it. And I think that they're just really excited to finally see that this product can be at the pump year round.
Very good, Sarah. We really appreciate having you on board with us here on our TV version, and one of these days we'll get you back on our radio version as well. It's particularly appropriate at this time of the year when we've had so much impact from weather, and we're moving into the ag season pretty heavily. So it's a treat to have you on board, Sarah. You get back out there and take care of all those ag producers and farm and ranch people, and we'll look forward to having you back again. Thanks so much. I know Lucy is absolutely just tickled to have you on board here, too.
Biggest fan. Thanks so much for having me.
All right, Sarah. Thanks so much. Well, we are back to the rest of the show, guys, but it is fun to have interesting guests in different categories. Next week, we're going to have what I think will be a very interesting show. We're going to have a gentleman on who has recently committed a pretty fair amount of assets in North Dakota business and investing in some businesses here in North Dakota, and that comes at a good time when we need that. We need more jobs and we need things like that. So next week we'll be talking that particular subject, and that should be pretty interesting. In the meantime, you might be wondering, what is Lucy doing here on our television show? And we may be wondering that too. I'm not sure. She's kind of taken the slow road here. She's pretty well tired out, I guess. All this talk about farms and calving and things gets her pretty excited. But, when you come in to visit us at Legacy Wealth Management, it's a pretty good experience. It's very low pressure. And Lucy's head pops up. She heard coming in to visit us. Sounds good to me. You're going to get a chance to meet with the staff we have. They're good people. You'll meet with Brady or Brian or myself as well. And, of course, we have Lucy, the wild puppy, there in our office most of the time. And she gets a chance to lay down on the job and rest. She had a busy day. Over the week, she was coming out into the lobby and dancing for people, and it was a good time. So we're happy to let her rest for a little bit. Let's shift gears a little bit right now. Every week we talk about the economic trends that really move the market and make things happen, and we put all those together with some research and some help from our friends Mick Higley and crew, and we call that Legacy Wealth Management's 5 Points in 5 Minutes.
Every week, the advisors at Legacy Wealth Management, with the assistance of economic researcher Mick Higley, comb the economic reports, and we come up with data and information that's helpful as we analyze the markets and put together our advice. We call this
5 Points in 5 Minutes.
Okay, Paul, I'm going to go ahead and kick us off here. The S&P 500 is down 5.5% year to date in total return through the close of trading Friday, April 8th of this year, but the index is up 4.8% in total return since Russia invaded Ukraine on February 24th of this year. Wow. Isn't that interesting?
Well, it is, and I think even this particular statistic is through Friday, April 8th, Brady. I think the numbers through this week, through the 14th and 15th, would be even farther down, wouldn't it?
Yeah, and it's not necessarily just correlated to the movement over in Russia, but that does have a factor. And it's been a rough start of the year, so hopefully we can see some of these craziness things going on in the world are starting to calm down a bit, and hopefully Russia stops attacking the Ukraine. I guess, I don't know.
Yeah.
So I'll take point number 2. If
All
that's
right.
okay. An estimated 57% of U.S. households will ultimately pay zero federal income tax in tax year 2021, as pandemic-driven legislation eliminated the tax bill for many American families. That's kind of a nice little perk.
And for many Americans, if you're watching this show today on Sunday, April 17th, I believe. Yeah, what are we?
Right.
April 17th?
Yeah.
Yep.
If you're watching it today, rather than on a delayed broadcast, tomorrow is the deadline for most people, for many people who file on April 15th or April 18th. It got postponed to the 18th because of a number of factors, but if you haven't already filed, it becomes kind of important. And when you hear us talk about our viewer mailbag in just a minute, we have an interesting question with regard to IRAs and spousal IRAs. Should be interesting to talk about all those things. Let's take a look at the principal and interest mortgage payment on a typical 30-year fixed-rate mortgage. It's kind of interesting. Since December 31st of 2021, the average principal and interest payment on a 30-year fixed-rate mortgage increased $92 per $100,000 borrowed. On 12/31/2021, the average mortgage rate of 3.11% translated into a monthly principal and interest rate of about $428 per $100,000. Now, by April of this year, the average mortgage rate of 4.72% translated into a monthly principal and interest rate of $520 per $100,000. But guys, that's still pretty cheap compared to history.
Yeah, I would say that rates keep on going up, and the difference of $400, $500, $600 a month can make a huge difference. So not great to see that go up, but guess what? CD rates are also going up, so that's a good thing.
That's a good thing. Okay, moving into point number 4. 1.13 million single-family homes began construction in 2021, the 10th year of increasing home starts since this measurement bottomed at 431,000 in 2011.
Very good. What do you have for national health care spending? A very important topic, I think, Brady.
Yeah, last year, healthcare spending, 4.3 trillion smackaroos. 18% of our nation's $24 trillion economy last year. That's a big chunk.
It is a big chunk. Brady mentioned earlier that we were hosting some seminars in the past week, and on April 5th, we had a seminar in Fargo with 80, 85, 90 people attending and gobbling up all those delicious meatballs and other chicken surprises we had, and there was kind of fun. It was a good meeting, and it was before all the weather happened. We got a lot of questions from that meeting, and of course, we were supposed to be back in Bismarck on April 12th, but the snow had other thoughts and minds for us, so we weren't able to complete that seminar, and we will be scheduling that in the not-too-distant future so that those of you who are planning to come in would be able to come in at that time. But we had some very interesting questions, and in this next segment, we call it the viewer mailbag. We're going to take a look at some of those questions. First of all, question number 1 says that we said that in some cases, a person can use stock dividends instead of bonds to provide income to an account. And the person asking this question had a legitimate concern. How does that work? They understand when you have a bond that they pay you interest, but how does it work when you have stock dividends, Brady?
Well, it's similar. It's another way to have income in your portfolio. You usually have 2 choices when it comes to stocks that pay a dividend. You can have that go into what's called a cash account as the dividends are paid out, whether it's monthly, quarterly, or yearly or whatever. That cash then accrues in the account. And then you can either use it to buy something else or take it out and spend it or whatever you want to do. A second choice you can have is called a dividend reinvestment program, where you're basically able to buy additional shares. That's kind of unique in that if you go and you want to buy shares of a company, you have to buy whole shares. However, the reinvestment purchase program, when it does pay a dividend, will allow you to buy fractions of a share. So it's a nice way to continually buy more shares if you don't need that income. But that is the 2 different ways that you can get dividends in your account.
But it's really fascinating because many people think, well, I have to have bonds there in order to create income. And at a time when bonds are having a little bit of a tough go of it, those dividend-producing stocks are really, in many cases, not for everyone, but in many cases, a better choice because you get the ability for the stock to go up, and the rising interest rates aren't going to kill that dividend. At least that's what it seems to be. Question number 2, we'll all 3 handle this because it's complicated enough. Question number 2, my husband is still working full-time and I'm retired. Here's the IRA contribution deadline. I know he can make an IRA contribution, but can I, as this wife, if that were the case, can I make one too? That's what she asked us at our meeting. And the answer is?
The answer is yes, you can on what's called a spousal IRA. You mentioned that earlier, Paul. And a spousal IRA is a type of retirement savings account that allows a working spouse to contribute to an IRA in the name of a non-working spouse. And that spousal IRA can be set up in 2 ways, either a traditional IRA or a Roth IRA, but not both. Correct, Brady?
Yeah, that's exactly right. And so the way it works is if you're under 50, you can each contribute $6,000 into each of your accounts, and those accounts are in your own name that cannot be combined. But you do have to earn that one spouse has to earn at least $12,000 in that year then. And again, if you're over 50, then it's $7,000 per account or $14,000 total that you can contribute. So it's a great way. It's the exact same thing as a normal IRA. It doesn't say spousal IRA on it. It's just a rule for the IRS. And you also have to file your taxes married, filing jointly to be able to qualify for that.
Oh, well, that's a good point. Married, filing jointly, and in order to be able to take care of that. We get a lot of fascinating clients who come in and talk to us, and everybody has a story, and that's one of the neat things about working in this particular business is you get to know an awful lot of people, and they have a lot of questions. The third question that we're going to talk about today goes like this. Lady mentioned to us that her husband had passed away recently, and he used to handle so many of the financial details. And her question is, will you help me sort out our accounts? How does that work? Are you guys there just to do investing, or will you help us sort out things? And I think I'm going to just plow right into this answer. It's exactly what we can do. We will help you sort out your accounts, whether you're married or divorced or one of the two has passed away. That's what we're there to do, is help you sort out your accounts and make things easier for you to understand and more effective for you as you are in retirement or heading towards retirement. So whatever the question may be or whatever the clutter is going on, that is exactly what your financial advisor should be helping you with. It's not just a case of, well, here's this mutual fund I think you should use, or let's invest it in this bond or stock. They're there to help you sort out the problems. You know what? We are zooming along, and in the last 2 minutes, one of the things that we always like to do here on Investment Talk TV, brought to you by the advisors at Legacy Wealth Management, is we always like to take a quick look at what the charts are showing us for the performance of the various index. Let's take a look at the Dow Jones stock market index for the past week or so. Pretty interesting, I think. Brady was right. We see some up days in there, and then holy moly, along about the 12th, which was Tuesday, markets didn't do so well.
Yep. Like I said, you're starting to see some earnings coming in, and, banks, like Brian said, were the first ones to report. Not so hot, kind of a mixed bag as far as good and bad. But you know what? That does have a big impact, especially when we're looking for some really good earnings right now. And hopefully we'll keep seeing some coming out of the woodwork here.
Brian, one of the things that our listeners often talk about, the people who are watching this show all over, it's fine to take a look at the Dow, but what about some of the other indexes? Let's take a look at the NASDAQ index and tell me what you see there.
You see more volatility here. Of course, we know the NASDAQ is very technology-driven and growth stock-oriented, so it's more sensitive to fluctuations in interest rates and things like that. And that's what you're seeing reflected here in the charts. Of course, there are some companies that have already reported earnings, as Brady alluded to, those reactions to that. And so you see a lot of volatility in the NASDAQ market too, don't you?
Speaking of some NASDAQ stocks, I saw Twitter making the news this week. Not only did Elon Musk indicate that he was going to purchase about 10 or 11% of shares of the stock, but he also said he might join the board. Then he said, no, he's not going to join the board. And most recently, he said, well, maybe I'll just take the whole company private. So lots of volatility in those areas. Let's finally take a look at the S&P. It pretty much mirrors what the Dow and the NASDAQ were doing. Going down there early on in the week, took a jump up in the middle, and then went down again and back and forth. And I know on Thursday it was a little rugged as well. That's a quick wrap-up of what the indexes look like this week. Just a couple of reminders. You are, in fact, watching Investment Talk TV, brought to you every Sunday morning by the advisors at Legacy Wealth Management. Don't forget, you can catch us here on live TV. You can also watch us on YouTube anytime you want to, simply by searching for Investment Talk TV or Legacy Wealth Management. I'm Paul Myers. For Brian Bruce, Brady Brunsvold, Sarah Heinrich, and, of course, Lucy the dog, thanks so much for tuning in. We'll be back again next Sunday.